Hi guys, welcome back to the YouTube channel. So for those in business, those paying taxes in the UK, today has not been a very good day in terms of Jeremey Hunt delivering today's autumn statement, not technically a budget, and basically increasing a lot of taxes for most people in the UK. In this video, I'm going to tell you exactly what's happened and what it means for you as a UK taxpayer and somebody investing in property or doing business in the UK. But before we do that, please make sure you do hit that subscribe button and like so that YouTube spreads this fantastic tax saving information with everybody and as many people benefit as possible. So the first thing is what's happened and why has it happened? So effectively, because of the war, because of the coronavirus, essentially we've got a massive deficit in the public purse, and as a result taxes need to increase and public spending needs to decrease. They reckon about 50 to 60 billion pound shortfall, and they're meeting this pretty equally with public spending cuts and also increases to tax. So what taxes are going up? The first one is basically income tax is going up for people that are higher earners. So historically, well up until basically April coming, if you were earning over £150,000, you would be paying tax at 45%. They've now brought this threshold down to £125,000. So there's basically going to be an extra £25,000 of income taxed at the 5% rate. Not a direct increase to tax, but national insurance, income tax, inheritance tax, the threshold to basically the personal allowance, currently £12,570. That's going to be frozen until April 2028. The inheritance tax and the rate band of £325,000, that's going to be frozen as well. So they're not direct increases and you don't start paying them extra now, but what's going to happen is inflation is going to erode away at those values. So inflation at the minute in excess of 10%. So actually by the time it comes to those rates basically being over that 6-year period between now and when those rates are actually increased, the effective value of those rates will be significantly decreased. So that's what's going to happen. It's basically a sneaky way of increasing taxes without directly increasing taxes as they have done at the minute. What else is happening? The dividend allowance. So when it was first introduced, it was £5,000 of dividends that were tax-free, and then they slashed it again, and now they're slashing it even further. So it's currently £2,000, and this means you can earn £2,000 in dividends and pay no income tax on this. From April next year, it's going down to £1,000, and then finally after that, it's going down to £500. So what this means is somebody paying as an additional rate taxpayer, paying 39.35% tax on dividend income, you are paying £590 more in tax, which is unfortunate. If you're only using it in your basic rate band, you're only paying 8.75% on that £1,500, so it's not as significant. But for somebody with significant income, they are £590 worse off because of this allowance being cut. Another big cut is to capital gains. So the capital gains annual exempt amount, that is being slashed. At the minute, it's £12,300. And this essentially provides for £12,300 worth of gains to be taxed at 0%, completely tax-free. From next year, they're cutting it to £6,000, and then the following year, it's being cut again to £3,000. So for a higher rate tax-paying landlord selling one of their residential properties where the tax rate is 28%, you would actually be £2,604 worse off because of this. Therefore, if you are looking to basically make capital disposals and you are paying higher rate taxes, it's probably worth looking to see if you can do a disposal before April, get it in this tax year to try and make the fullest use of your capital gains annual exempt amount before it's lost. You have to use that each and every year, otherwise it's lost. You can't carry it forward, you can't carry it back. That sale has to take place in that tax year in order to utilise that. From April 2025 onwards, electric vehicles will be subject to road tax, vehicle excise duty. They are looking at also increasing the benefit in kind rates from 2025 onwards as well at 1% per year. Therefore, now everybody's gone after electric cars, they're in demand. This is where they are going to slowly start to creep up the taxes on these, because essentially they are missing out on a lot of tax revenue. As people have switched from petrol and diesel cars to electric cars because they're tax efficient, as soon as everybody's got petrol cars and it's the norm, then actually they can start to tax them as well. And that's exactly what we're seeing happening here when they're starting to increase it by 1% a year from 2025 onwards. From the 1st of April 2025 as well, those increases in the nil rate for stamp duty land tax are again being reversed. So it's going to reverse from 250, which it was recently increased to, back to the 125,000. Same for the first time buyers, going from 425 to 300. And the first time buyers relief will revert back to the 500,000 from the 625,000. So it's a small amount, but from April 2025 onwards, it's being cut back to the original amount, even though when Liz Truss extended it and even when Rishi and Jeremy got in, they were keeping that, but it appears it's only here for a short period of time. Another thing to watch out for, so it's all spending cuts except for where it's going to help generate additional revenue. So in this budget, that they've actually been able to find almost £80 million to go to HMRC to help them target the wealthier taxpayers. So they're basically a serious fraud and tax compliance team. They're going to receive an extra 80 million investment over the next 5 years, which is, of course, with the aim of increasing tax revenues. They're suggesting they invest 80 and they're hoping that this is going to pay off and they're going to get a lot more back from people that necessarily aren't complying with their tax affairs or are under declaring or misrepresenting them. That's their intention. So overall, what does it mean for the taxpayer? Well, unfortunately, it's not a good budget at all. It's the complete opposite of what we were seeing a couple of months ago when Liz Truss and Crossy delivered their budget, essentially, in that it was all tax cuts, and it was all a great time for people in the UK. It was, everyone was happy and everyone had extra money in their pockets. This time it really is the complete opposite, and a lot of people, especially the kind of hard-working, mid-range taxpayers, not the kind of super wealthy here, not people at the bottom, it really is the people that property investors with a £50,000, £100,000 are really the kind of type of taxpayer that really does work hard for their money. They're the people that are being hit by this. The landlords, people selling their properties. They had Section 24 coming in, Section 21 now, and actually now with the pretty much the capital gains exempt amount is pretty much all but gone. 12,300. When that was increasing, it was a valuable relief. Cutting it to 3,000 is pretty much redundant. There's not much saving there at all having it. So it's not a valuable relief anymore. So this really is a tax raid on the hard-working, the wealthy and the landlords, and it's certainly not good news at all. Hopefully it is just temporary, but the cynic in me believes that once they've done this, they're not really going to go back in 2 or 3 years' time and say, actually, you know what, we've basically filled that deficit, we're all good now, have your tax cuts back. Unfortunately, with this type of stuff, once it's here, it sticks around and they don't tend to reverse it. What do you think to today's announcement? Let me know in the comments. Otherwise, make sure you do hit that subscribe button and give this video a thumbs up. Cheers for watching, guys.